And kind of, to expand on that idea, I mean, it's really the importance of discipline, because the market is a zero sum game, and um, if you're, if you're in a long position, somebody else is taking, if somebody sold you that, and maybe they're in a short position, and the money flowing into your account, in a lot of cases, is flowing directly out of their account. Um,
How much of it is a zero sum game? The reason I ask is because I remember watching Brown one day, and he was mentioning that options is not a zero sum game. I
Oh
didn't know
well,
what he meant.
okay, that's a different story, but
Yeah.
okay.
Oh, so it is a different thing, right? Okay, that's good to know.
well, I think it's helpful because, it reframes your mentality, because then you really take it seriously, right? And you realize that, like, you really are on your own, and nobody's going to help
Yeah,
you. Nobody's going to come and save you. And um, you really, the only thing that's going to protect you is your habits and your risk model. So
but it's the other side of freedom, isn't it? When you have the freedom to do what you want, you have the freedom to make all the mistakes you're going to have to learn from.
yeah, man. I mean, you also just want to keep the perspective of that there are some, like, very, very, very sophisticated people operating in the market, who are operating,
Oh
and you're
well,
operating in them, with them, alongside them, competing with them in a zero sum game. So
Uh,
when you consider that, it's you know you really, you just take things more seriously, and
yeah. I mean, you know, the problem is that basically when you take a decision to step into this market, you are basically taking in the decisions of putting yourself in a game where you know for a fact from scratch that you are competing with people that basically have much more capital, much more capital compared to you, and they have privileged or prime stream of information, so they are more they're well informed,
mm,
well, and you're not, and and another point is that the cost of trading for them is really really much lower than
yeah,
it is from you. And so if you put all the things together, basically you are competing with people that have a lot, a lot, much more capital than you. They are basically much more well informed than you, and they are basically, you know, quicker to react. So you really need to work yourself out if you want to
yeah.
compete,
I mean, it's
right?
really, the thing that's really shocking is, like, if you, I don't know if you kind of read into what happened with Citadel and Robinhood, but Citadel was paying Robinhood hundreds of millions of dollars for order flow information. So their edge was literally you,
Fuck.
the retail trader, and
Yeah.
they were paying hundreds of millions of dollars for that edge, which they wouldn't do if it wasn't profitable, right? Um,
No, absolutely. Okay.
so yeah, they're basically
And even if you can,
front running orders, and all sorts of shenanigans too, naked short selling, all that stuff. You know, it's a wild, wild game. I think, and crypto is no exception. I think crypto is even crazier, some of the things that happen in the market. Um,
go
again,
on. Yeah,
you know,
to some extent, yeah.
yeah. I mean, I think a lot of that will be revealed in hindsight, and sort of the things that were going on that we might not be aware of. But um,
Would you?
yeah, I mean,
Well,
go,
Falcon, since like you have, I mean, you are such a big advocate to crypto, but regardless what crypto cryptos are gonna do or perform 1 year, 2 years from now. But speaking about the the current structure of the market, the exchanges are basically the means that you have as a retail investor or trader or participants in the market. Do you think that somehow cryptos are kind of falling in line with the traditional ways of doing things, doing business, or do you see some sort of a different pattern, like which crypto could differentiate themselves, or or not? Some sort of a honest question,
Yeah, I
Great
guess
question, that.
I'm
Great
not
one.
sure what you mean by that. Do you mean like uh, is Bitcoin trading being dominated by institutions, or do you mean like is there another crypto project that's going to rise to prominence?
No, no, no. Just like no, no. Regardless, which gonna be the cryptos who's gonna rule them all, but as an infrastructure, because right now we are seeing, Binance, Bybit, Eurobit, BitMEX, whatever. So I was just wondering your view on, how things could play out from here, as from the infrastructure side of things. Like, do you think that the old sector will be kind of phagocytated, engulfed by the traditional financial system, or do you think we are going to be able to build up a new whole system to transact, to make
Yeah,
exchanges,
no, this
something
is
like
this is
that?
a very very good question. A big misconception a lot of people have. I think the existing structure will just be built on Bitcoin network, and the traditional financial system will be integrated on a Bitcoin network. And you can already
Okay.
see that with BlackRock, Fidelity, Vanguard, these guys, these big asset managers, all getting involved in the Bitcoin space.
Yep.
BlackRock bought
Yep.
they bought 7% shares of Bitmain, and then another giant industrial scale miner. Um, it was hard for me to find what their Bitcoin holdings were on their balance sheet, but it was pretty easy to find their investments in their stakes in the big industrial scale Bitcoin miners. To kind of it's kind of along the lines of like the guys in the California gold rush they got rich selling. It wasn't the people digging for gold; it was the people selling the shovels. You know,
Yeah, of
and
course.
that's kind of their mindset. But they're definitely getting involved, and they're definitely they're building on it. And another important point to mention is that I circulate that Fidelity report, and in the Fidelity report is very very important. If you haven't read it, you should go read it. I'll post it in.
Yeah, as I was telling you, I written about that. I didn't have time to do that. BlackRock, whatever.
Yeah,
Really,
yeah.
my
No, I
time is
mean
limited, so
the big takeaway from that was that there was uh, uh, the research was conducted by a group called Octonomics, which is headed by a woman named Elizabeth Fontaine, who used to work in the wealth management division for BlackRock. And she published this huge article that Fidelity is obviously using to sell their clients on Bitcoin allocation.
okay.
And one of the very important the idea challenges a lot of the preconceived notions that we have about the market and some of the assumptions that we have that aren't may have been true in the past but aren't necessarily true now. One of those being correlations with traditional markets. So in that Fidelity research paper, they noted that Bitcoin was one of the least correlated assets with traditional markets, and that makes it's very appealing for investors. And that makes sense because Bitcoin has the highest Sharpe ratio of any asset. Um, a lot of people might not know what it is, but it's just basically a measurement of an asset's risk adjusted return, um,
Yeah.
and its correlation to the broader market. So it wouldn't be possible for an asset to have the greatest Sharpe ratio if it had a high correlation to the broader markets. It just wouldn't be possible, and
Yeah.
that's why it maintains that number one Sharpe ratio position. And another important point about that piece was they mentioned that uh, Bitcoin is no longer, they describe Bitcoin as a store of value and a risk off asset, which is very important because traditionally it's been seen as the opposite, right? And
Well, even nowadays, it's still a risk of asset.
yeah, no, it's, but, it's sort
I'm
of,
not. I'm not. well, I'm not saying it's gonna be that forever, but yeah, at least today it is still seen as a risk on asset. Uh,
Yeah, I know, but what
just
I'm
just just look at what happened, last week about if you take the chart of gold, Bitcoin throughout last week, you clearly see what happened, right? So it is still a risk on asset.
well,
Doesn't
yeah,
mean
I
that
mean,
it cannot change in the future, but
well, what I'm saying is that that is changing, right? It is changing currently at this moment, and
probably what it will change, especially with. I think it will change when people realize that these kind of power that governments have about the money, the ability to make transactions. As we saw in Canada, uh, it's going to be gradual, but I think we will reach an inflection point where people realize that fiat money cannot be trusted. You know.
yeah, but the other tie into that is that the interesting thing Fidelity was doing was um, they were taking a traditional ETFs, maybe ETFs that focused on gold or oil or equities, U.S. equities, um, and they were allocating Bitcoin to those ETFs. I think they've already done it, and these aren't Bitcoin ETFs. They're maybe oil, gold, equities, whatever. And they seem to be
Oh,
applying the same number to all these ETFs. It's typically a 5% allocation, and
okay.
and I don't know, you could do a deep dive on why they chose the 5% allocation, but I would assume it's because they in their paper they noted the lack of correlation to traditional markets, and but also of course Bitcoin is very volatile, but then the answer to deal with volatility is just to lower the position size, right? So if it's a 5% allocation in your ETF, then the volatility doesn't really matter, right? It's just 5% allocation, but
Yeah.
it does hedge, it provides that greater risk adjusted return to any ETF by adding that allocation. And that, the fact that Fidelity is doing that means that other large asset managers are probably going to follow and do the same thing. And why wouldn't they? Because they just increase the risk adjusted return of their ETF. So, um, but, you know,
Yeah, I mean, it is a same logic of, Nassim Taleb taking a risk. I mean, but the asymmetric return is so big that I'm willing to take the risk.
yeah, an interesting thing about that, like talking about Bitcoin getting involved in the asset space, is like BlackRock has a big stake in these miners, probably has a big stake in Bitcoin itself, and
Probably.
BlackRock people are all over the current Biden administration or current U.S. administration. Um, the chief economic position is a former BlackRock wealth management guy. The deputy Treasury Secretary, the number two guy under Janet Yellen is a BlackRock guy, and um, the VP Kamala Harris's chief economic advisor is also a BlackRock guy. So,
Hmm. Wow.
um, and BlackRock is getting involved in the Bitcoin space. So
Yeah,
the
absolutely.
idea that they're going to advise the president to ban an asset that they're getting involved in and allocating capital towards is pretty asinine. Doesn't make sense. Um,
All right. So, fellas, it's been a very productive conversation, but it is kind of late here in Italy, so I need to go to have dinner and I need to meet the boss.
Yeah, it's getting quite late here as well.
Yeah. So, okay. It's been a pleasure. It was very interesting. And I honestly thank you all to be part of it because I had a lot of different insightful things to think about it. I think we could take another round of it next week, right?